You may have noticed that oil prices are up again. It's not because of any new disruption. It's not because of fresh escalations in Ukraine. It is because oil producers deliberately made that choice. I am talking about OPEC and its allies, the cartel of oil-producing countries. They held a meeting in Vienna on Wednesday. It was the first in-person meeting since the COVID-19 pandemic. Most experts were predicting an output cut, and that is exactly what it did. They agreed to slash oil production by 2 million barrels per day. What was their justification? Apparently, to stabilize the markets.
Our priority now is stabilizing market. Now, we could be accused of wanting to influence market in a negative way. That's everybody's prerogative. You and others will see how we conduct ourselves in the months to come.
Well, no one is buying that argument. This production cut is not aimed at stabilizing the markets. It is aimed at driving up the prices. Let me put out the theory behind it: supply and price having an inverse relationship. Meaning, if supply rises, prices will fall, and if supply falls, prices will rise. In this case, OPEC and its allies are doing the latter. They are cutting the supply to drive up the prices, and it's already working. Brent crude rose by 1.7% to reach $93 per barrel. Oil prices are now at a 3-week high. The question is, why now? This is OPEC's largest cut since 2020 during the pandemic. What explains this timing? Simply put, because the money is good. In the past, OPEC countries were happy when oil was trading between $70 and $80, but this year the revenue has been bumper. When Russia invaded Ukraine, oil prices rose to more than $120 per barrel. So the OPEC countries got used to it. With an economic crisis around the corner, they want to build up a cushion. And the best way to do that? Drive up the oil prices and the revenue. Now, coming to the big question, how will this affect you, the consumer? We will have to see how oil companies transfer these higher rates to us. As for the overall supply, it is unlikely to change. Why is that? Because OPEC countries were already producing below their official quotas. So in practice, it won't be much of a reduction. That is the technical part of OPEC's decision. What about the political aspect of it? The United States was pushing OPEC to increase oil production. In July, Joe Biden had traveled to Saudi Arabia to reset his ties with the kingdom. What does Riyadh do? The exact opposite. They have ganged up with Russia to reduce oil output. The White House has called this decision short-sighted. Listen in.
OPEC's decision to cut production's quotas is short-sighted while the global economy is dealing with the continued negative impact of Putin's invasion of Ukraine. Look, it's clear that OPEC Plus is aligning with Russia with today's announcement.
Aligning with Russia. That's a serious allegation to make. The fact is, this oil cut reveals America's loosening influence over Saudi Arabia. Not only have they not condemned Putin's war, now they are siding with him to increase oil prices. Clearly, this is a message to Washington. Is there anything that Biden can do about this? Well, the White House is considering 3 moves. Number 1, to keep releasing oil from their strategic reserves. Like we said at the start, it's all about the supply. If the U.S. can release more oil into the market, prices will cool down. Number 2, legislative action. The U.S. Congress is discussing a bill called NOPEC, the No Oil Producing and Exporting Cartels Bill. It's a bit controversial. Right now, OPEC Plus members and their oil companies enjoy sovereign immunity. Though they are a cartel, they cannot be sued. The NOPEC bill aims to change that. It would allow U.S. courts to hear antitrust cases against OPEC members. Now, this bill has a lot of grey areas, like what kind of power can the US courts have over a foreign power? Will it affect diplomatic relations? So, for more than 2 decades, this bill has been stalled, but maybe not anymore. Reports say it could garner 60 votes out of 100 in the Senate, and if passed, it could be a huge blow to the US-Saudi relations. What's the plus side? OPEC may not be able to rig the oil prices so freely. And coming to strategy number 3, open the oil taps elsewhere in the world. Reports say the US is all set to strike a deal with Venezuela, sort of like a quid pro quo. The US will ease sanctions on Venezuelan oil, and in return, the president, Nicolas Maduro, will hold free and fair elections in 2024. Just to be clear, neither side has confirmed this deal. It is purely based on reports in US media. But if true, they reveal how desperate Joe Biden is. Remember, November is election month in America. One of the biggest poll issues is the rising energy prices. So Biden seems to be trying everything to keep the markets calm. He made one U-turn with Saudi Arabia. Now he could be making another U-turn with Venezuela. Tells you how powerful oil is in politics. WION now available in your country. Download the app now. Get all the news on the move.